This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming out of a midweek holiday. It's a holiday shortened week. It's a very holiday shortened week, but that doesn't, of course, stop markets from doing what they do. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, morning. You said the word holiday thrice. I think you really enjoyed yourself yesterday.
Not quite enough, Sonia. I think looking for one more.
And there is one more coming.
There is one more coming.
Just pull through two days and then back in the dressing room.
Oh, absolutely. Well, things are looking a little muddy once again, because I think we're back to trying to answer and figure out that old question, is bad news or is bad news good news? And the answer changes sometimes. What I mean by bad news is data. So is bad data good news, which is the fact that as data comes in weaker, rate hikes will slow down, or bad data means a recession is on the horizon? I think the markets latched on to the latter. These are two-day changes for U.S. markets. The Nasdaq is down 0.75%. We will react to 2 days worth of changes. Remember, the 10-year U.S. yield is down 13.5 basis points. I mean, it's a slippery slope, and we've seen a very sharp correction. The dollar index is down almost a full 1%. These are large changes which we're coming. Not so much for the equity market. The S&P, by the way, is down about a 0.25% or so. The tech index lost a little bit more. Now let's come to what really happened. So markets, especially as you could see overnight, are starting to reflect growth concerns. So we got two data points last night. We had the job openings data and the factory orders, both which slowed down. Guess what the initial market reaction was? Markets rallied. Markets did well. Indices were higher. And later in the session, they all started correcting and ended at almost at the low point of the day. And this is the reason I'm saying that, the realization starts to set in. While, yes, slower data means maybe, the Fed is done or maybe close to being done. But it also means that inevitably growth will slow down. And that's the price to pay for inflation to come under control. It's not unanticipated, but the fact that it's starting to finally come through in data, I think, is important. Gold is the sort of risk proxy, the opposite of risk, right? And that's jumped above the $2,000 an ounce. It was up about 2.5%. We'll talk more about this in a little bit. The next data points this week, which will kind of reinforce this sort of weaker data, or maybe, they will be counter to what we've seen so far, is the ISM services number, which is later tonight. This is equally important. Remember, on Monday in the US, we had the ISM manufacturing data, which disappointed, which was weaker. So services inflation is the bigger problem, as many have pointed out, and I think we'll get the answer today. And the jobs data on Friday will be the next big one. From a Fed perspective, that is one of the top most important data points that they watch out for. Now let's come to the market here. So the SGX is up on your screen, and I think compared to the close on Monday, it is indicating a higher start. Although I think on a day-on-day basis, the SGX is lower by about 1/3%, but you've got to compare this to Monday's close, and then you'd have a 30, 40 odd point higher kind of start on the SGX. Now on Monday, the Nifty got to the 40-day exponential moving average. This is a level we put out on Friday and on Monday as well, which was 17,406, and then sold off. At Monday's close, the number is 17,406. So we got to it, and we are just under it. So that's the first level to cross on the upside. The next level is the 50-day moving average. The 17,542 is the 50-day moving average, which is again very close by, another 40, 50 points, and the index will do it. Bank Nifty has tested the lower end of the March 10th gap area. The gap area, basically, the lower end is 4839, the higher end is 41,208. On the 10th of March, between the 10th and 11th of March, we had a very big runaway gap, and we are at the lower end of the gap area as of Monday's close. So the upper end becomes the next kind of level to take out, which is 41,208. On the downside for the Bank Nifty, the 40-day exponential moving average at 40,466 should not be violated, should be supported. These are simple kind of levels to watch if you're trading in the very near term. Mind you, this is a holiday shortened week. There is still one more holiday, although you got 2 trading sessions. There is the RBI policy meet tomorrow. So, it's likely to be choppy. It's very unlikely to be a one-way kind of a market, especially also given the fact that global markets are looking a little confused about which way to read the data going forward. Sonia.
Oh, absolutely. And give and take everything. Today is going to be a good day, right? The start is going to be in the green as per what the SGX adjusted is suggesting. So I think the Nifty futures close was 17,474 on Monday, and the SGX Nifty is now at 17,500 plus. So looks like it's going to be a good opening for sure. But there are mixed cues, of course. I mean, the US markets ended their 4-day winning streak yesterday. The Dow was down about 200 points, and there are definitely signs of a slowdown in the labor market. So that market has come off a tad bit. But for our own markets, there are more pros than cons, more pluses than minuses. So I'm going with green today because, one, the FIs continue to buy in the market, albeit a small amount because, volumes are on the thinner side given that it's a truncated week. The Nifty has been holding above that 17,350 mark. And the next level to watch on the upside is the 200-day moving average of 17,490. So I'm going to watch that very closely. Apart from that, as Prashant was pointing out, tomorrow is the RBI policy. The expectation is of a 25 basis points rate hike and perhaps a continuation of the stance, which is a withdrawal of accommodation. But for me, the biggest positive cue this morning is the updates that have come in from the financial sector. Whether it was HDFC Bank, Bajaj Finance, M&M Finance, or even Bandhan Bank, even AU Small Finance Bank, most companies have reported a steady growth this time around. In fact, CLSA has gone ahead and upgraded Bajaj Finance as well. We'll talk about that in greater detail. But robust growth, deposit growth for HDFC Bank was in excess of 20%. Bajaj Finance new loan growth was 20%. M&M Finance as well saw both disbursement and loan growth, which was very strong. So, that's one pocket that could do well. Yeah. And the lead from the front for the bulls. So I'm going with green today.
All right. Sonia, and it was a good session actually on Monday. Yeah. The Nifty ended higher and it came to life in the final hour of trade actually. That was because the Nifty Financial Services Index, normally the expiry plays out on Tuesday. This time around, Tuesday was a holiday, so that's why it did play out on Monday itself. And that was an outperformer, particularly in the last 60 minutes. So it ended higher. And the breadth of the market was good. We pointed this out on Monday morning itself. In the month of April, historically, the broader markets tend to outperform what the Nifty does because fresh allocations come into play. How is trade set up? Well, it was a good start, as we said, to the fiscal year. This firm resistance, though, for the Nifty in that vicinity of around 17,500 to around 17,550. Expect some consolidation ahead of the crucial RBI meet. Well, what did we see in Monday's trading session? There was about a short covering that played out. Both the Nifty Bank ended higher, and you did have open interest that was lower. But it wasn't the FIs that are covering their shorts. Well, they in fact added short positions. Close to around 8,000 short contracts is what they added. The short positioning continues to remain elevated at around 88% odd. But what's telling you that at higher level you're likely to see some selling is the call writing. And they wrote more than 20,000 call contracts. Pulling up the options picture then, for the market on the whole, there is still writing being seen at around 17,400 as well as 17,300. Just take a look at that. 17,350, the premium's around 50 rupees odd. So you deduct it from there. And then you get that support zone of around 17,300 odd mark. Remember, I'm not going down to around the 20 DMA, which is closer to around 17,200. The first support zone comes in at around 17,300, while on the upside, the 20 and the 50 DMA, they become a bit of, the 50 and the 200 DMA become a bit of a resistance zone. On the Nifty Bank itself, you'll want it to defend, that 40,500, 40,700, and you have the 50 DMA as well up for you on the screen. So the SGX Nifty, you adjust it and you compare it with the Nifty futures. We're likely to see a 30-point uptick. Sustaining, holding on to that will be important. And we have a broad range, 17,300 on the downside, 17,500 on the upside. Let's see how this goes.
All right, well, let's tell our viewers.
By the way, before we start, Prashant and Naija, I don't know if you guys noticed, but there's on the Twitter website, did you notice the Dogecoin sign?
No, I'm not.
You have. Prashant, I'm sure you have. It's interesting, right? Elon Musk does so many things to stay relevant and stay in the news.
I just have one question. What does it mean?
Only he can answer that. But it's been going viral, so I thought I'll just speak about it.
It's a Doge, right? It's a dog, but it's a Doge.
The Dogecoin.
We have a little Shih Tzu at home, and my son insists on calling him the Doge. So it's interesting what's happening with Twitter, of course. Always never boring with Elon Musk. Well, let's quickly tell you what we have lined up here over the first 30 minutes of the show. We'll get you updates from markets across the globe. Gary Schlossberg of Wells Fargo Investment Institute will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At about 8:30 this morning, we do a fundamental stock analysis with Deven Chokshi of KR Chokshi Securities.
All right. Well, you know, we have a lot of market veterans talking about a buy on India, and here's one of them. Venugopal Gare of Bernstein says that as we head into the second quarter of the calendar year, he expects the Indian equity markets to see a quick rebound in the near term after 6 months of an underperformance to emerging markets. He says even in a bearish global setting, he always sees room for rallies led by various factors. His call for a rebound is premised on a confluence of tactical factors, including valuations and a bunch of macro factors. Venugopal says financials, real estate and cement are best for this rebound, while staples and utilities will underperform.
Well, Amish Shah of Bank of America expects the Nifty to correct, or rather time correct, registering a flat year and underperforming the EM basket. He believes sector skew will be important for any alpha generation. He continues to be underweight on sectors with high earnings risks and expensive valuations and prefers investment themes over consumption. Amish says BOFA remains overweight financials, industrials, metals, cement, autos, utilities and healthcare. And they're neutral on energy as a sector. They're underweight on IT, communication services, staples, and discretionary. Amish says with tightening liquidity, they expect large caps to outperform small and mid caps.
All right, important to take note of what's happening in the money markets as well, because the rupee is now at almost 82.50 to the dollar. So let's get you some money market views for today. Kunal Sudhani of Shinhan Bank says US job openings in February fell to the lowest levels in nearly 2 years. And there was a continued decline in factory orders, pushing yields and dollar index lower, while gold was higher. He says a one-year-old ascending support line around 101.3 appears as a key support for the dollar index. For the dollar INR pair, Kunal says 81.80 acts as a support, while 82.45 is a resistance.
On bonds, Neeraj Gambhir of Axis Bank says the market witnessed year-end buying by insurance and mutual funds before they lose indexation benefits in the new year, while traders were seen selling ahead of the borrowing calendar. He says the market traded range-bound as borrowing calendar came in line with market expectations. For the rest of the week, he says market will take cues from RBI, MPC and US non-farm payroll data. He expects the RBI to deliver a 25 basis point rate hike and the 10-year benchmark bond yield to trade in a range of between 7.25 and 7.4%.
Okay, lots to talk about and lots of calls coming in on India in terms of a positive view, a buy on dip. So it's an interesting morning of trade. We'll step into a quick break. On the other side, our entire research team will be joining in to help us with a list of top 10 stocks. Stay tuned. Welcome back. Hope you're having a good morning of trade. We definitely are. The SGX Nifty is indicating that the start will be in the green. Ignore that level that you see on the ticker because the adjusted rate is about 50 points higher. Let's get our entire research team to tell us about all the top stocks that you need to watch out for. There are plenty of the financial stocks in the news, but before that, Sonal is joining in to tell us about the windfall tax revision and the impact that it would have. Sonal, over to you.
Good morning, Sonia. Well, it's a big cut this time around because the tax on windfall taxes, so to say, on crude oil production, they have been cut to nil versus 3,500 rupees per ton earlier. Also, the special additional excise duty or the export duty on ATF and petrol, it continues to remain nil. However, on diesel, it has been reduced, but there is some duty. It has been cut to 0.5 rupees per litre from 1 rupees per litre. So yes, it's a positive, where CLSA also says that it is the first time in 9 months that we've seen a cut to zero. The first time it was levied was back in July 2022. Reliance's windfall tax burden after this is at a record low, which is positive. Post-windfall tax realization is at $75 per barrel, which is for ONGC and Oil India, and that's why they have a buy rating here. However, it is important to remember that now crude oil prices, they have surged beyond that $85 per barrel level. So yes, it is a short-term positive, but do remember companies have been able to make realizations between $70 to $75 per barrel only. So we'll have to see which way things go from here.
All right, thanks a lot for that, Sonal. Well, let's hop across to Abhishek. It's the start of a new quarter, so we're getting banking business updates that come in. Abhishek, what do you have on your radar today?
Well, to begin with, HDFC Bank, robust business momentum is seen both in terms of deposits as well as the loan growth. So deposit growth of 20.8% YOY is perhaps the best in last 11 quarters, and about 8.7% quarter-on-quarter is the best in last 20 quarters. The loan growth is at 17% YOY, a 5-quarter low, but sequential loan growth of more than 6% is one of the best in last 4 quarters. CD ratio has declined due to robust deposit momentum, and in that, the CASA or the low-cost deposit that's grown at massively about 9.6% quarter-on-quarter, which is pretty impressive. Bajaj Finance, the AUM growth is pretty strong despite the competition from banks. The new loans are at 76 lakhs, up about 20.6% YOY, and a decline of 3% quarter-on-quarter, which is seasonal in nature. Customer base that remains strong, growing at 4.5% quarter-on-quarter. The AUM growth at 28.8% YOY and about 7.15% quarter-on-quarter. So sequential loan growth over here is one of the best that you are seeing in 4 quarters. IndusInd Bank, the loan growth has bounced back, perhaps one of the best that you are seeing in last 14-15 quarters. Deposit momentum remains same as we saw in Q3. Advances growth was 21.3% YOY and about 6.6% sequentially. The CASA ratio has dipped a bit. It's at 9-quarter low. However, CD ratio is at 9-quarter high, which augurs well in terms of the net interest margin. So Federal Bank, the business momentum is strong, one of the best in last 14-17 quarters. Deposit momentum of 17.5% is the best in 14 quarters, and about 6% sequential also is a strong growth. Advances growth of 20.2% YOY and about 3.8% sequentially. The CASA ratio on the flip side is at 11-quarter low. M&M Finance, the disbursements and collections are pretty strong. Business asset that is largely the AUM part that's grown at 7% quarter-on-quarter, which is strong. Q4 disbursements are down about 4.8% quarter-on-quarter, but for the month of March, the disbursements have been pretty robust. Collection efficiency for March is at 105%, and asset quality over there has improved. Bandhan Bank, the loan growth is pretty impressive, and the CASA ratio has also improved sequentially. The deposit momentum remained tepid at about 12.2% YOY. However, loan growth was at 11.6% quarter-on-quarter, and despite the adjustment, it was at 9.5% quarter-on-quarter. CASA ratio has improved sharply to 39.3% when compared to 36.4% in the previous quarter. Back to you.
All right, Abhishek, a whole host of stocks that you're tracking, quite a few banking updates coming in there. I'm looking at Vedanta. They come out with a quarterly update as well, and it looked more good than bad. And also you have the dollar index that's cooled off to around 101.5, which is good news for base metal prices on the whole. Let's start off with the aluminum business, which is bulk of their business. On expected lines, that was more or less flattish on the top line. The zinc India business, well, it looked good. So though you have the refined, the saleable metal, that includes zinc as well as lead, that was up 3%. But the silver integrated volumes, well, they have jumped up by close to around 13%, even on a sequential basis, even on a year-on-year basis. So the silver volumes are quite encouraging. The zinc international business as well, where you're seeing BMM, that mine ramp up. So the total mined metal out there was up by close to around 14%. The only problem is the oil and gas, yet to show signs of, an uptake out there. So there's a degrowth if you look at it, both on a sequential as well as on a year-on-year basis. And that's been the problem pocket. But besides that, all the other segmental data looked quite good. Steel as well was higher with a gain of close to around 18% on a year-on-year basis. And power sales as well. PLF is higher. Balco, you saw higher amount of sales out there. So that as well looked quite good. So we're going with green on Vedanta. But Mangalam's joining us to tell us about Marico. They came out with a quarterly update as well. Mangalam, tell us more.
Well, Marico looks like a decent set as far as their quarterly update is concerned, and largely because the company is seeing gradual recovery, though they believe more is in store once the monsoon's update comes by. But the India business grew in mid-single digit volumes. That's a positive. It was led by Parachute, which grew in high single digits, and also decent numbers coming in from the value-added business, double-digit value growth, which is also a margin-accretive business for them. What did not do as well was Saffola Oils, and that's because year-on-year, the same time last year was an absolute high base, and that's important because that also gives you a peek into what something like an Adani Wilmar or Patanjali Foods would report in their edible oils business too. Continued growth for their foods, premium personal care and digital-first brands. These are valuation drivers for the company going forward. And as a result of which, the consolidated revenue for them grew in low single digits on a year-on-year basis. Importantly, both quarter-on-quarter and year-on-year gross margins and operating margins expanded. So that's a positive. And I'll be watching out for all the other FMCG companies showing margin expansion going forward, given the raw material pressures are easing.
All right, thanks a lot for that. Thanks to our entire research team for joining in and helping us prep for the day. Here is the list of stocks in case you missed out on them. Positive news flow coming in from ONGC, Reliance Industries, HDFC Bank, Bajaj Finance, IndusInd Bank, Vedanta, Marico, Federal Bank, M&M Finance and Bandhan Bank. While, guess what? There's no stock with negative news flow on our radar. That's likely to open in the red. But let's find out what's been happening in the world of commodities, because that's where all the action lay in the last fortnight. Manisha Gupta is joining in now to give us the latest on what's happening there. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, absolutely. Another Asian day which has started on a very positive note for commodities. The crude oil prices to begin with is holding 7% of gains in this week. With the OPEC and allies cutting output, the Chinese demand coming back into the market, to the fact that the U.S. crude inventories, not just the crude inventories, by the way, but the gasoline and distillate stocks are headed lower, tells you that the demand seems to be coming back. And then the street is also reacting to the Japan service sector, which grew in the month of March, the most in 9 years, also supportive. The net long in crude oil prices also seem to be increasing, the short covering coming in after the OPEC and allies surprise cut. So that seems to be supporting crude as well. But the major action clearly is in the precious metals, where we are looking at the gold prices in India at an all-time high. The international markets yesterday gained up by $40. So we are just about $40 away now from an all-time high in case of gold in the dollar terms as well. The support also comes in from the fact that the ISM survey showing that U.S. manufacturing activity has slowed down for a fifth straight month. You have the dollar index now trading at a 2-month lows, and the investors seeing probability of a 57% of no rate hike in the month of May. All of that has been supportive. So not just gold, you have silver trading at a 1-year highs, platinum at a 1-year highs as well, and a smart rebound is what we are witnessing in the base metal prices also.
All right, Manisha, thanks very much for that. Well, let's get in a word on global markets, and let's listen to some sound bites that we got earlier in the day. Listen in.
Well, I think it's some consolidation after a stellar rally that we had last week. Job openings, we also got the manufacturing report that disappointed somewhat, and then the GDP was tracking 3.2%, now it's tracking 1.7%. So, that is kind of the cause for consolidation, but that still doesn't deter me from saying that I think we can have a more positive tone to April, because if you look at the broader picture, we sort of have the recipe for a soft landing, which is inflation expectations are coming down, and broadly speaking, economic data is surprising to the upside. So that actually still supports the resilient stock market. I think we are just about to be done with tightening. And if you think about how stocks perform, they don't perform well during the tightening phase. But what happens after tightening is sort of this relief that is to say, okay, we may be done with the rate increases. That's behind us, but the economy is not weak enough. And I think that's where we're sort of headed. I think the second order effects do come to roost, and that's what eventually causes a recession. So I don't think we're in that scenario now. And the banking turmoil for now, to me, is contained, if not all the issues have been fully solved there.
Okay, the global cues, of course, a continuing conversation. We'll take a quick commercial break here. We'll come back. Our fundamental stock analysis coming up. Devin Chokshi should be with us. We will also have the management of Borosil to talk to us about their acquisition of Goel Scientific Glass Works. They've paid 23 crores for it. What does it mean for the business? All of that coming up.
Welcome back. Hope you're having a good morning. Well, don't go by the SGX Nifty rate that you're seeing on the screen. That's indicating a 50-point downtick. Compare the SGX Nifty with the Nifty futures close that we saw on Monday. And that's where we're saying that the start will be in the green, But how do we do from there? That's going to be interesting. Well, to help us out with some stock analysis, though, we're joined by Devin Choksi, who joins us on the show. Hi, Devin. Good morning. Thanks so much for joining in.
Hey.
Well, let's start off with Bajaj Finance itself. Abhishek just told us about their quarterly update. And that's one of the big focus stocks. Even in Monday's trading session, I think it was a little bit subdued, but then later in the session, it did quite well. How do you view this stock? It's never been cheap, but would you pay, pay a price for this stock at current valuations?
Hi, Nigel. Good morning. Well, I think the more important part about the company is that when you compare Bajaj Finance with the rest of the corporate banks who are equally active in the retail credit, you find that Bajaj Finance is possibly growing almost at a 50% higher rate of growth compared to all of them, with 29% kind of a growth on the advances and 45% kind of a growth in deposits. I think the company is doing reasonably well in accelerating the pace in expanding the credit book that they have. They are just little short of 250,000 crore a year this point of time. And at the same time, I think what is more promising is a new loan that they have been booking in the subsequent quarters, which is where I believe that I think the company is well positioned. You rightly said, I think it's not a cheap stock, but at the same time, it has corrected from where it was. And today, I think it is available at a valuation which is at least 15 to 20% cheaper compared to what it used to be. So from that perspective, I believe that I think the time to buy the stock has come. Maybe this market uncertainty is giving you more opportunity to buy at lower levels. So certainly, I would prefer to consider it in the portfolio, largely because of the fact that they are using the balance sheet very well. At the same time, I think the retail credit growth expansion is taking place with the use of technology, where the cost of distribution of credit is comparatively low. So I find that proposition, I think, is really more appealing compared to many other players in the industry.
Okay. Devin, hi, good morning. Thanks for joining in. Since we're talking about, updates from financials, the other very strong set of numbers came in from Poonawalla FinCorp. Now, the disbursement growth has been 150%. So there is, of course, a little bit of this caution with respect to whether there's a high amount of unsecured book, large amount of unsecured loans that they are giving out. But be that as it may, the numbers are looking very good. And the stock has gone from 100 to 300 in the last 2 years. Do you see further upsides here?
Yes, Sonia, good morning. Well, once again, they are following an aggressive path at this point of time in expanding the book. One has not tasted how exactly the collection mechanism is working at this point of time. And particularly when I think the situation is not so favorable, how the collection mechanism works. So I am always a little bit more concerned about the companies which are expanding the size of the book relatively faster. I would rather like to see in the lending business the companies remaining stable while expanding the book. Having said that, I think this case Poonawalla Finance, I think they are more on the aggressive path at this point of time. And maybe selectively one can look at this company in a corrective market cycle. That may be probably a better approach. So that at least you have downside cushion available in case I think something doesn't work right for the company. I think at least you should have margin of safety. So maybe I would prefer to go with corrected price because probably I think it has factored into account the kind of growth that it has registered already in the price that it is currently quoting at.
Okay. Devin, just a few other kind of names before we go any further. Oil marketing companies all sold off quite aggressively on Monday. IOC, HP, BP. Reliance has started to move up a little bit. There is news of this windfall tax cuts, etc. as well. How's this pack looking to you, and what are your picks here?
So good morning, Prashant. Well, I believe that uncertainty situation still continues. On given day, you have a fall in the crude oil prices. And next day, I think you have a sharp jump in the crude oil prices. So from a perspective of, I think, taking a view for a longer period of time, I think this is not a very nice time to basically bet onto this particular space. Also, the fact that we are into the election year already, this year we are likely to see overall, I think 10 or 11 states, I think, along with Union territories getting into the election. And then finally, we are going to have Lok Sabha election next year in 2024. And this is a time when probably I think most of the OMCs and all, I think, would not get the opportunity to adjust their prices. From that perspective, too, I guess I think this space is not looking, I think, very appealing at this point of time to me. I may stay away from it, I think, for a relatively longer period of time from this space. Rather concentrate on Reliance, where we have more clarity on the business aspect.
All right, Deven, just going to ask you about Hindalco. They had their annual analyst meet. I'm just going to run through some broad takeaways. Nothing really new came out of it, but they reiterated more of what they've been saying in the past. So run you through a few focal points. Their focus on organic downstream expansions continues. For Novelis, they're looking at a $3.3 billion expansion over the next few years, and bulk of that will be from a 600,000 greenfield expansion that they're doing in the United States. In India, they're focusing on that $1.1 billion expansion, alumina capacity, as well as downstream aluminum is what they're looking at. And important to note that they say most of this growth will be funded by cash flows, and they're keeping the balance sheet at current reckoning as well. So there won't be any big deleveraging because the kind of capex that they have lined up. On the coal mines, well, the Chakla coal mine, that will be commissioned in FY26, but the bigger mine, that is the Meenakshi coal mine, now they're saying it will start in FY28. Earlier, they were hinting that it will start in FY27. So that's important as well because that will be captive coal that will be coming out for them. On Novelis, they say near term, yes, there are some headwinds because destocking in the beverage can industry, weaker outlook on the specialty segment. They're talking about building and other segments out there which are seeing some bit of compression because of higher interest rates, and energy prices have been very volatile. So in the near term, they're saying that yes, the EBITDA per ton could be subdued. Remember, the past quarter, it was around $375 per ton. But on a longer term, they're saying by the quarter 4 of this fiscal, that's FY24, they'll head back to around that $525 per ton that they've been talking about. They also continue their focus on ESG. Carbon neutral is what they're targeting by 2050. And 30% reduction in the carbon footprint is what they're talking about as well by 2026. So those are all the big takeaways. We have a Jefferies note. They have a buy rating out there. They're saying that the stock at around 0.9 times, well, valuations are reasonable. So they have a target price of around 570 rupees. And they're saying that the ROE as well, they're expecting it to hold around this 11% for the next couple of fiscals. Deven, what's your take on Hindalco? The stock has seen a correction from the recent peak, but debt will not go up. They have big expansion that's coming on stream. And Novelis, well, it could be softer in the near term, but that's a converter business. And if they can get back to around $525 per ton, will be positive. Your view at 400 rupees.
Yeah, Nigel. Generally, I have seen an experience, I think, from the capital expansion that the companies in the commodities business, when they do, I think till the time the expansion gets complete and they enter into a build cycle, those companies generally do not perform enough as far as the stock market pricing is concerned. I think most of the commodity players have, up till now, have followed this particular symptoms. Whenever the expansion took place, I think they have underperformed in those periods. I guess I think the similar situation is likely to repeat. They are talking about a larger window as far as I think expansion and the benefits out of the expansion is concerned. We are talking about, I think, next 3 to 5 years, which is probably, I think, very large period. And during this particular period, how the commodity prices behave, I think it's something which is not very clear to anybody for that matter. So I would rather stay myself away. I would rather look at opportunities elsewhere. Maybe commodities at this point of time is not something which appeals me because of, I think, whatever uncertainty reasons that we are talking about in the global economy.
Okay. The other company that reported quite a good set of numbers this time is M&M Finance. Strong growth coming through in the quarter gone by. I think it's a 42% year-on-year growth in terms of monthly disbursements for them. Even loan growth was very good. But this stock has had a choppy past, right? Do you like it now? Is the risk-reward favorable?
So, yeah, Sonia, I think you rightly mentioned they have had their rough patch, in past. Largely because of the fact that I think during the uncertain period or maybe challenging period, as you may want to call it, as the recovery is slowed down for them. Rural economy, I think, definitely affected them. Today, fortunately, the situations have started improving for them in the rural economy, particularly the vehicle finance business, both the pre-owned vehicle as well as the new vehicle finance business is once again started picking up, and particularly in the commercial vehicle segment, tractor segment, the business condition remains pretty good. So from that perspective, I'm not very surprised that they have registered higher amount of loan growth. At the same time, till last year and earlier, I think they were having little subdued performance on the loan expansion. So probably this growth is also being seen on the lower base comparatively. In my viewpoint, I think more aggressive they go, probably I think it's a sign that I would be a little bit more cautious. I would rather believe that in finance business, the companies which are growing with a steady pace of growth, they are better for my portfolio than the companies which are accelerating the growth in a given situation.
Okay, so that's on M&M Finance. The other pocket that I wanted to check with you was on the auto space, because we do have numbers that have come out for the entire auto sector. But I'll come to that in a bit. In the meantime, we also have the management of Borosil joining us. So that's the first corporate that we're going to speak to right now. The company announced an acquisition of 90% stake in Goel Scientific Glassworks via the subsidiary Glasspack Limited. Now, Goel Scientific Glass is one of the oldest scientific glassware companies in India and has 2 plants in Vadodara. So to discuss this acquisition, what the way forward is, we have Srivar Kheruka, who's the MD and CEO at Borosil now. This is a 23 crore acquisition. So just wanted to understand, Mr. Kheruka, what the rationale behind this acquisition was. And Goel Scientific Glassworks, just if you can tell us a little bit about it. What is the revenue by the end of FY23 likely to look like for this company? What is the margin profile? And what is the way forward for the business?
Good morning. So the rationale for the acquisition is quite simple. As the one of India's leading scientific, consumable providers in the country, we wanted to expand our product portfolio. Goel Scientific, being one of the largest, scientific glassware companies in India, have a very strong product portfolio in the area of process systems. And this is used mainly in R&D, in pharmaceutical industry, in the chemical industry, as well as in defense. And we thought it would be a very good add-on product range to our product portfolio. Mr. Hemant Goel has been, who started this business many, many years ago, wanted to partner with Borosil because we can provide the sales, marketing, muscle, and the brand to expand the offering not only in India but overseas. So that was the main reason to acquire this business. As far as the revenues are concerned, last year I believe their turnover was roughly in the 45 odd crore range, and they've been growing fairly rapidly in the last couple of years after COVID, with increased R&D spend here, and I think this year they've been growing at more than 30%.
So Mr. Kheruka, we do have the numbers actually for the last 3 years, and it's been a steady performance. I mean, it's almost, I think, 47 crores in terms of revenues. But can you tell us, if you look ahead, what kind of average growth can the company eke out? And would you be taking any debt on your books as well post this acquisition?
No, it's a small acquisition, so we don't really need any debt to fund this, frankly. But we believe that this company, we would like to really double the revenue in the next 3 to 4 years. And we believe there's enough potential there. And this is a very attractive business because it's not commoditized at all. It's very specific. You need a lot of subject matter expertise in these areas. So the margins are also, the return on capital employed could be quite attractive.
All right. Hi, Srivar. Thanks so much for joining in. What are the margins of this business? The 50 crores, you're saying it goes to around 100 crores in the next 3 to 4 years. What is the margin profile?
I think at that growth rate, we should, at least deliver 20% EBITDA margins, if not higher.
And as of now, what is it?
20% EBITDA margins, if not higher.
And as of now, it is 20%, or it goes to 20% once you double your revenues?
So right now, it's slightly lower than that. But it's early days for me to predict it, frankly. But it could be more than 20% in my view as we double our revenues.
All right. Okay. So we've got enough about this small acquisition then. Well, talking about the scientific part of your business, how is Glasspack doing? That's the entity which is buying this unit, right? In the pharma packaging segment, if I look at it, for the first 9 months, there's a bit of a degrowth coming on a high base. What's the outlook from year on? From that division itself, at the 9-month mark, I think it's done around 55 crores. So what's the outlook going ahead? Have you seen some improvement in Q4? And for FY24, how is it likely to fare?
Yeah, look, as far as the pharma packaging business, Q4 has, shown some rebound as already, predicted or stated last time. But and we expect a very good year coming up. When I say very good year in this space, 10, 12, 15% growth is a very good year because it's a very stable business. So as far as the overall scientific business is concerned, I think the revenues without Goel Scientific's acquisition would be north of 300 crores for the year. And this is going to rapidly grow with the acquisition of Gold Scientific plus the synergy benefits it gets. So our goal is maybe we could try and double this business in 4 to 5 years on an organic basis, and that's something I believe we can do.
Mr. Kheruka, good morning. Could you tell us what is the revenue split for you across segments, user-based segments?
Yeah, so we have two divisions. We have a consumer division and we have a scientific division. So if you look at, say, the first 9 months of the year, you'll see about 65% of our revenues come from our consumer division and 35% come from the scientific division. So you can say roughly 1,000 crores of revenue, roughly 700 crores would be consumer and 300. So 70-30 would be the split.
I think the last time we had you on the program, just tell us a little bit about the input cost trajectory. How is it panning out? Because I think that did hurt margins in the last quarter, in the third quarters a little bit overall. How is it looking now, and what does that mean overall for margins in 24? I mean, as much as you can see.
Look, as far as input cost, there's definitely, there's been a reduction in the increase of input costs. So they've kind of flattened out. And we had to take some price increases to pass on those increase of input costs from last year. And I don't think we'd need to take any further price increases. I think our margins would bounce back to this pre-inflation level, in the coming year. And in principle, with scale benefits coming, we should, be able to improve our margins even beyond that. So I think the input cost pressure as such has reduced quite substantially in this last quarter.
So you said, you told us 24 to 26% margins, around that range is possible. You'd stick with that? So obviously both our divisions are separate. The scientific division and consumer division if you merge them, I think 22, 23 is what we had kind of forecasted past. And I think that's something that we should be able to achieve.
Okay. Earlier you said your goal is to double this Goel Scientific Glassworks business, right? In 2 years, if I'm not wrong?
I said 3 to 4 years.
In 3 to 4 years, okay. Okay, so your goal is to double that business, got it. Any more acquisitions that you're looking at? And do you have any kind of, amount that you've earmarked for acquisitions over the next, say, 12 to 18 months?
So frankly, we're always looking to see if we can get good product categories. We believe we have a strong brand and distribution channel. And the idea is to add on new product categories. So we're always looking. I can't say any more than that. But in principle, there's no amount earmarked. We are fairly cash, let's say, strong as on a balance sheet. And I don't think we are looking so much of that cash is going for acquisitions. It could be organic growth or inorganic growth. It just depends on the valuation. It depends on so many factors. So there's no target for an acquisition. If it makes sense, we'll do it.
All right, Shiva, we're running a little short on time, but your opalware business, the capacity had doubled, right, in January itself. So how is demand shaping up out there, and what is the utilization levels you're looking at?
Yeah, so look, glass, when you have a furnace, it's a step function. You go from 1 to 2, and it's not, you can't sell immediately the entire capacity, which is the case in all glass production. But in this case, we're seeing a very strong demand even now. If I look at Q4, it's the lowest quarter in terms of market demand in the country for consumer products. We're already at maybe 30-40% capacity utilization in the first part of the rather in Q4. And if I look going forward, I think that's going to increase. We would hope to reach 70-80% for the financial year 24.
All right. Very quickly, before we let you go, I'm looking at a Monarch brokerage note. They have a target price of around 510 rupees. But they are saying that unlocking of value will come about once the demerger takes place, because I just try to add the sum of parts. What's the update out there? When do we see two listed entities? Which quarter?
Yeah, well, this is a good question. This is not in my control, or it's not in our control. There's many other agencies involved who have to process this whole application and move it forward. Our best guess is by June, we should see that.
Okay, thanks a lot for joining in, and all the best with the new acquisition. And thanks for taking the time out and speaking to CNBC TV18. Appreciate your thoughts. Well, that's the word coming in from Borosil. They have gone shopping and acquired a new company. So that's details on that. Let's slip into a quick break. But let me tell you what's lined up in the next half an hour of the show. Top stock ideas coming in for the day from our technical and F&O experts in just a bit. We'll also decode the stock rally with our Momentumizer segment. And before the market opens in CNBC TV18 Stock Board, we'll highlight the top stocks in the news to focus on for the day. Stay tuned.
Okay, welcome back. Let's just quickly take a look at what the SGX is doing. The adjusted SGX, so it's compared to 17,474, SGX at about 17,508. So slightly higher start, mildly higher start is what we are looking at. Now, what to do in terms of specific trades? Mitesh Thakkar and Sudarshan Sukhani are with us with exactly that. Gentlemen, good morning. Good to have both of you here. Sudarshan, what's the trade to take if you get a 30-40 point higher start? What would you recommend?
Good morning. See, after many days, the Nifty has broken out of that trading range. And it was some pleasure that I can say that the Nifty now, at least currently, is a buy on dips strategy and instrument. And that applies to the Bank Nifty also. So don't buy the gap up. The markets are likely to see a dip today. So towards 17,350, the cash index, that would be a perfect buying opportunity for the Nifty, or a very long intraday trading range. So it's difficult to predict which of these events will happen, or maybe even both can happen, but trade only the long side of the market on a dip. And that applies, as I said, for the Bank Nifty also.
Okay, so trade the long side of the market on any dip. Mitesh, good morning. Looks like it's going to be a start in the green today. How would you trade it? Do you think the market has enough gumption to get above this 200-day moving average of 17,500 thereabouts?
Good morning. I think the short-term indicators are extremely positive, and the other event which happened, which was on Friday, was that we had a gap up. Typically, it looked like a breakout gap, which means that it will reverse the downtrend and start some kind of an uptrend. So we maintained 17,500 as the first target area, which is what you highlighted, the 200-day average. But I think good chance that we are looking at a test of 17,750, 800 zone. So yes, I think we've been trading with long bias since the last couple of days and would advocate fresh buying position. In fact, all my stock calls are on the buy side today.
Okay, so tell us what the stock ideas are then. Mitesh?
Yeah. So as I said, I think all the stock calls are on buy side. I have few large cap names on the list today. Hero Motors is a buy with a stop at 2,400 for a target of around 2,500. Bajaj Auto is the second auto name on the list. Buy with a stop below 3,950 here. Look for 4,100 as the target area. ICICI Bank is a buy as well. Keep a stop at 874. Look for targets of 900. And Sectoral is the final buy call with a stop below 230. Buy this for a target of 240 to over 242.
Okay, got that, Mitesh. Sudarshan, what about you? What are the picks you have?
Bajaj Finserv is a buy with a stop under 1,250. My only short is an intraday short in Hind Petro. That stock, because of reasons that we understand, is now on some kind of a downswing. So intraday short with a stop above 232. IDFC First Bank is a buying opportunity with a stop under 54. And Tata Consumers is a positional buy. It was there last week also, and fortunately it has turned up. So it still continues to be a buying opportunity for positional traders. Buy with a stop under 700.
All right. Thanks a lot, gentlemen, for that. We'll take a quick break on that note. We'll come back with lots more on the market. We'll also have Prabal Sen of ICICI Securities to discuss about the announcement of the revision in the windfall tax and the impact that it would have. Stay tuned.